Hi everyone, welcome back to Be Rich. As the week ended on Friday, the market I think went on a bit of a up and down seesaw. Some shares I saw going negative beginning as soon as the RBI policy was announced. Then it rebounded, then it went extremely positive. Like Tata Motors, for instance, when the market opened, went negative, and I was like looking at it peachy, and then I had some tiffins and snacks on that one. And by the end of the day, the closing bell, Tata Motors was up almost 3%. So that's crazy. That shows you how volatile the market is. So keep in mind when you see markets like this, not to get swayed and pulled by the market. A lot of you would think, like my boys do behind the camera, maybe I should have put, if I known this in the beginning of the day, I would have put 50,000 rupees into Tata Motors, and that 50,000 rupees I would have earned 3% for doing nothing by today. And all those ifs and buts only will give you more anxiety and create more FOMO and make you feel terribly sick and ruin your weekend. And I'm here to tell you not to ruin your weekend, right? This is a marathon, it is not a sprint. So there's no point if you're running a marathon, every step you take, looking at the inclination of the road or the condition of the turf or what is in front of you or what is behind you, looking at the wind speed, it doesn't help when you're running a marathon. It helps if you're running a sprint, knowing the turf, the inclination, all that helps. The wind speed, even the clothes you're wearing helps. But when you're running a marathon, it is a question of a mind game. Most marathon runners are fantastic at controlling their mind and their thought process because a marathon is very painful and takes a huge toll on the body. That is what value investing is. Value investing is more akin to marathon because it takes a huge toll on you mentally more than financially or physically. Financially, it really doesn't do much because when you're investing in tiffin coffee range, the money is very small and you won't even notice it's missing on your table if it's going because it's like tiffin coffee money. And that small trickle, that small bleed which is happening, that will turn into a huge, massive river down the stream much later on, thousands of kilometers away when it joins the ocean. But in the beginning, it is very, very frustrating and it's very slow. So, my advice is stick to what you know, stick to the list, and keep sipping away. As promised, I am working with my team to prepare that video which I wanted to share with you, very specifically, very detailed with an Excel sheet with charts to show you if I had started investing in 2009. Let's say I started investing 30 to 40,000 rupees every month and I had picked stocks and I went month on month like what I'm doing now, telling you to sip. If I had done that kind of sipping from 2009, where will I be today? What will be my portfolio, from 2009 to now? And that astonishing data I'll share with you, which should give you far more than anything, it should only give you motivation. I hope that data doesn't turn into another pickle for me where I have to sit and explain why these stocks we picked, why we didn't pick those stocks, because, like I said, it is irrelevant. It really is. Don't get fascinated and obsessed with what stocks you're buying. As long as you're buying good quality companies at good price and good value, all things will be fine. Because we're just using this as a train or a bus or a car or a scooter, whatever you want to see to get to your destination. So if you're getting into a train, as long as the train is safe and good and clean and gets you where you want to go, it doesn't matter. Same way, the company which takes you there to where you want to go to achieve your financial freedom at the end, if it gets you there, fine and dandy. Right away, I'm sure a lot of you will be thinking, if that is true, then why aren't we talking about Reliance? Why aren't we talking about Adani? Like I said, go back to what I first said. Good quality stocks, right, at great value. So those criteria have to be met. If they are not met, then you cannot invest in them. That includes all your micro caps and all your small caps and all some of the mid caps which are there. If they are not of quality, quality is the owner's integrity, the business model, how the company has been doing, how they're treating their customers and how they're treating their employees and how they're treating their investors. All these things add up far more in fundamental analysis than number crunching. A lot of you new ones who have joined the group, especially on Instagram, keep asking me, tell me how to analyze, how to look at charts. I find that very funny because we don't talk about charts on this channel at all. We're not traders here. We don't worry about candlestick. We don't worry about T-bars or whatever nonsense those things are, right? I don't draw charts and plot it out and say, see, the market is moving like this. And even Warren Buffett doesn't waste time looking at charts. It's like astrology, right? Astrology is useful to know what about planets are and how planets move on the sky. Other than that, them influencing you and what they may do to you at the time of birth. I don't subscribe to it. I don't think you subscribe to that either, right? Same way, data points are useful to know if its company is profitable, if it's making cash flow. All that only comes into question after we do the first fundamental analysis, which is especially very pertinent in India, where we analyze the company's core, which is the business they're doing, the products they're selling, who's the owner, how long have they been doing it, how well have they been doing it, and is there a moat for this business. Moat I've discussed in another video which I did. There kind of 4 or 5 types of kinds of moats which are there, and depends, some are brand related, some are product related, some are service related, some are like once you get onto the environment you're hooked on, like an iPhone. You buy an iPhone, you're stuck into the Apple ecosystem. After that they got a chokehold on you, and you'll have to, Oracle is true with Oracle too. So they got a chokehold on you, and then you have to keep renewing and staying in that environment. Like in UK, Apple is being sued for the amount of money they're charging for their cloud services because they feel it's too much. Their consumers are being gouged by Apple. It's another story which I don't want to get into. I have different opinions about all that, but that is a moat. So that's the kind of analysis we have to do about companies before we get into it. But once with all that is done, there is something which you can do which will make your life much easier if you're willing to do. So let's say you have subscribed to this idea that you want to run the marathon, right? That you have faith in yourself, that you have the mental fortitude to do this for 10 years, 15 years, and achieve this phenomenal goal of huge returns. So then you are secure, and your future children and your grandchildren are secure, and that is something very paramount and very important to you, that you're going to work towards that. There is a technique which will be very useful, which you can do, which is done in sports, which is done in lots of other things. It's something known as front loading. It's a technique which is used in various fields and various ways, and it can be used in value investing. So the question becomes, how does this become useful in value investing? So I've got my points noted down, so I'll keep referring to it. Don't get angry when I look down at my phone and I'm not looking at you when I'm talking. It's just for me to refer to my points. First one, which most of you I'm sure are doing. If you're in the age of 27 and early 30s, that means you should start right now. Earlier you start, the better it is, right? So same is true in a marathon. If you start when everybody is starting the marathon and you run with everybody and the gun goes off, then it's easier for you to run. Let's say everybody's already been running for 5 minutes, and then when you reach the starting line and the guy says you can still run if you want to run, that means you are 5 minutes behind everybody. Or if you're coming 20 minutes late, you're 20 minutes late. If you come a few hours late, some of the guys will be finishing the marathon. He'll say, yeah, sure, if you want to join, you can run still, if you want to run it. But the chance of you finishing it becomes that much harder. So this is very true in investing too. So start early. Starting early means starting now, right? So starting now means, let's say this is the first video you're seeing, like some of you who have joined me on Instagram, this is the first time you're taking a foray into investing. That doesn't mean you go buy the first stock, or Vinod is talking about, I see my brother's talking about something. You just don't go buy it. If this is the first time you're seeing it, then please take some time and learn about it. You do have the time to learn, right? So spend the time learning what it is, how it is done. And Anand's got some books about this. There are other books which are available. Spend some time reading, ask questions, talk to people, gain the confidence before you start buying. If you're already there, then start investing, right? That's how start early. It's all breaks it down to you guys. The next thing is being consistent, right? In marathon running, we have a consistent pace. We try and keep a pace. Sometimes if you are slow, you look at a guy who's ahead of you and you say, okay, that guy's my pacer. No matter what, I'm going to make sure I keep seeing him. So that's the way you pace yourself. You get into that mental agility where you keep yourself fluid and you say, no matter what, I'm not going to let that guy get away from me. So that way your pace improves, right? So that is being consistent in running. Same way in investing, you have to be consistent in your contributions, right? So focus on growth. That means buying of value. You buy companies of value and not buy something that just looks fancy. Like a lot of you keep asking me, can I buy Trent? Can I buy Titan? I'll be like, at these price levels, why would you want to do that, right? If you see the median, like I've said in lots of videos before, the median is a bell curve, right? The median is in the middle part. If it's on the expensive side, even if it's coming close to it, this is considered a median because the price at some point of time was behind this bar. So you want to buy it here, so then you can ride it to the other side. There's no point you buying close to this because eventually it will go here. So that's why I say keep looking at that. So keep that in mind. That's how you buy in value. And most important thing about front loading when you're looking at investing is when you're starting at the age like Rupesh or Arun behind the camera, you guys are not married, you don't have much loans, you don't have much commitment, so you can fork out much of your salary towards investing. This is the hard part. This is what differentiates winners in marathon from people who just run the race for the sake of running. Because in front loading, what you do is you sacrifice your current, joys in life for the future returns. And the reason why you do it is that date where you can start enjoying will get much closer to you. And the reason why you start early and you're willing to sacrifice now is because tomorrow Rupesh might get married, he might have children, then investing will become that much harder. But since he's been front loading all these years when he was single, sacrificing all these single years and investing, that gives him the buffer when life reaches a point, when it happens, when he's married and he has children, there's commitments that appear to him, he can look back and say, okay, I can take this easy a little bit because he's been front loading so much. And if he's still able to consistently keep going at that pace, that goal, instead of taking 15 years to reach 1 crore, might drop even down to 8 years. That I'm saving for the next video, which will happen next week, hopefully, where I'll show you actual numbers and show you how fast and rapidly you can reach these goals if you stay consistent and you commit to front loading and you get there. So this video is a preamble to that. It kind of sets you up to that, so it kind of gets you motivated and get jogging towards that. This is a Saturday, so there's nothing happening. The market is closed, so I didn't have much market news to share with you in terms of stocks and shares. That I'll have more of that on Monday when the market's open and we get into the week. As far as what the FII has done in terms of activity, do join me in the group on Instagram where we're having these discussions about what the FII is doing and what the DI is doing and all the other fun stuff. Anyway, thanks for watching the video as always. Do subscribe and do those wonderful things to those buttons down there, and I'll catch you again soon. Thank you.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.